The day speculation became a storm. It began with a price move so sudden that even seasoned traders froze. A quiet market erupted into a frenzy, pulling millions of eyes toward a chart that seemed to defy gravity. For many, it looked like the arrival of easy wealth. For others, it felt like a warning that no one wanted to acknowledge. But everyone sensed the same truth. Something far bigger than speculation was unfolding. Today, we remember this moment as a turning point. The day cryptocurrency transformed from an underground experiment into a global spectacle. To understand why this matters, we need to explore how a simple surge in value exposed the world's deepest fears and greatest hopes about digital money. Because long before the headlines arrived, the seeds of the storm had already been planted. For months, the network had grown quietly in the background. Developers refined code, miners expanded operations, enthusiasts spread the word through forums and small online communities. But most of the world ignored it. Banks dismissed it, analysts mocked it, and then, almost overnight, the price began to rise. At first, it looked harmless, a small uptick, an echo of curiosity, but then it accelerated. Every new high attracted new investors. Every new investor added momentum. What had started as a grassroots movement now carried the gravitational pull of a global event. The reveal came quickly. Media outlets began reporting on the surge, often with disbelief. Social platforms lit up with stories of early adopters who had turned tiny investments into unimaginable gains. Curiosity evolved into excitement. Excitement evolved into frenzy. And with each wave of enthusiasm, the price climbed higher. But beneath the celebration, something else stirred. Economists warned that markets rarely rise without consequence. Skeptics argued that the surge reflected hype, not substance. Regulators questioned whether unchecked speculation could destabilize economies. Even longtime believers felt a mixture of pride and unease, wondering whether the movement they had nurtured was losing its identity to a force it couldn't control. The storm was still gathering strength, and the world was about to witness how speculation could reshape not just a market, but an entire narrative. As the surge intensified, the market transformed into a living organism, rapid, emotional, unpredictable. New investors poured in daily, driven by stories of overnight fortunes. Exchanges struggled to keep up with the influx of users. Charts turned vertical, and every dip felt like a gateway to even greater gains. The line between caution and excitement blurred, but with rising prices came rising tension. Some early adopters felt uneasy watching the movement they once nurtured shift into a speculative frenzy. The networks built on ideals of decentralization and financial empowerment were now overshadowed by the lure of fast profits. Conversations once centered on technology and philosophy now revolve around price targets and predictions. This shift didn't go unnoticed. Veteran traders recognized the unmistakable signs of a classic speculative bubble. Governments and regulatory bodies issued warnings. Financial commentators declared that the market had detached from reality. Yet instead of slowing the momentum, the warnings seemed to amplify it. Fear mixed with greed, creating a volatile cocktail that pushed prices even higher. Behind the glowing charts and viral headlines, cracks were forming. Exchanges faced outages as demand outpaced their infrastructure. Transaction fees surged. Delays increased. The network was showing signs of stress under the weight of global attention. Critics seized every weakness as evidence that the exuberance was unsustainable. Inside the community, the divide deepened. Builders and developers feared that the sudden wave of speculators would overshadow years of careful progress. Purists warned that hype could erode the credibility of the entire ecosystem. Meanwhile, newcomers, many unfamiliar with market cycles, believed they had arrived at the dawn of a world-changing opportunity. And then there were the quiet observers, individuals who recognized both the danger and the potential hidden within the chaos. They saw that a surge this powerful could reshape public perception forever. If the market survived, digital currencies would enter the global conversation in a way no technology had before. But if it collapsed, the backlash could set the movement back for years. As the chart climbed toward heights that once seemed impossible, one reality grew harder to deny. Speculation had become a force capable of lifting the entire ecosystem or tearing it apart. And the storm, now fully formed, was drifting toward its first collision with reality. The higher the market climbed, the more intense the emotional pressure became. What once felt like a remarkable rise began to resemble a test of collective psychology. Every new peak drew louder cheers, but beneath the excitement, anxiety simmered. People who had never invested before suddenly found themselves staring at charts deep into the night, convinced that missing out would mean being left behind. The conflict erupted when early adopters faced a dilemma they had long avoided. Their modest investments had grown into life-changing sums. On one side stood caution, whispering that nothing rises forever. On the other stood hope, urging them to stay just a little longer. Some sold too early and felt regret. Others held too long and felt fear. The market was no longer just numbers. It was emotion, magnified across millions of screens. As the frenzy peaked, institutions began to take notice. Some quietly entered the market, seeking exposure to what they once dismissed. Others issued stern warnings, predicting inevitable collapse. Media narratives shifted from admiration to alarm. Analysts debated whether cryptocurrency represented a technological revolution or the latest in a long line of financial delusions. Every headline fueled volatility, pushing the market into even wilder swings. For developers and longtime believers, the chaos felt surreal. Years of slow, thoughtful progress were drowned out by speculation. Their warnings about fundamentals were ignored. Their efforts to educate were overshadowed by the noise of predictions and profit chasing. They watched as an ecosystem they had patiently built morphed into something they barely recognized. The storm reached its emotional breaking point when ordinary people began leveraging their savings, taking risks they couldn't afford. Convinced that the surge would never end, lines formed outside exchanges. Apps crashed from demand. Social media turned into a tapestry of triumphs and tragedies. Screenshots of dramatic gains beside confessions of fear and confusion. Governments reacted. Some floated the idea of restrictions to protect consumers. Others considered embracing digital assets to avoid falling behind technologically. This uncertainty rippled across markets, creating shockwaves that amplified every movement. The price would soar on good news, then plunge on rumors that spread within seconds. A sense of inevitability descended. Everyone knew that no market could sustain this level of heat forever. The question was no longer if the surge would break. It was how it would break, and who would be left standing when it did. In those final days, the conflict reached a peak of tension. Every trader felt the pull between belief and fear. Every investor's sense of fragility behind the momentum, and the movement, once rooted in innovation, found itself hurtling toward a moment that would redefine its identity. The calm before the collapse didn't feel calm at all. It felt like the world holding its breath. The breaking point arrived with a single sharp drop. Small at first, almost forgettable, but in a market wound tight with emotion, even a tiny slip could trigger an avalanche. Prices fell faster than investors could refresh their screens. Panic erupted. Social feeds filled with fear instead of celebration. And in the chaos, the storm finally revealed its true form. The climax unfolded in cascading waves. Automatic trades triggered liquidations. Exchanges froze under the strain. Fortunes that had taken months to build evaporated in minutes. The optimism that once fueled the surge turned into disbelief, then anger, then silence. The world watched the chart plunge, realizing that speculation had inflated not just value, but expectations, and those expectations had finally snapped. When the dust settled, the aftermath felt almost eerily quiet. Some investors walked away, vowing never to return. Others held their positions, convinced the collapse was temporary, and a few, the ones who looked past the volatility, saw something deeper. Despite the chaos, the network still functioned. Blocks continued to form. Transactions still settled. The technology itself remained untouched by the storm. That was a revelation hidden beneath the wreckage. The surge had distorted the narrative, but it hadn't destroyed the foundation. What began as a speculative frenzy ended as a reminder that digital currencies were more than their price charts. They were systems, ideas, and innovations with a future beyond the fluctuations of a single market cycle. The reflection grew louder in the months that followed. The crash forced the world to ask harder questions. What gives value to a currency no government controls? How does a technology survive mass speculation and mass disappointment? And why, after such a dramatic fall, did people still believe? Slowly, the answer emerged. Speculation may have created the storm, but also revealed the strength of the underlying vision. The network endured. The builders kept building. The community learned, adapted, and continued forward with a clearer sense of purpose. Beneath the volatility was a resilience that speculation couldn't erase. And as the next chapter of the digital revolution began to take shape, one lingering question remained. One that every news cycle would eventually ask again. What